Hey, what's going on, guys? Welcome back to Q and Learning, and this is Stock Picks. And the stock we'll be going over today is Envova International Incorporation, ticker ENVA. Currently valued at roughly $35.90, and they IPO just back in 2014. This company basically does a lot in finances online and uses AI, basically usage to trade stocks as well as analyze the overall market. And so the reason why I chose this stock right now is because of the fact that, Envova in the past month or so, they've been running off quite a high in the past 2 weeks, running off a 15% run. And so in the short term, I do think that there is a little bit more room to run. And just going over to the interactive chart on Yahoo here, we can see relatively strong support along this 100-day moving average here at 33.78. And for you guys that are wondering what all these, lines and numbers are. So basically right here, this like orange area in between are the Bollinger Bands. So these are something you guys can definitely use. It's really easy. And can also show where it's a really good time to either enter or exit a position. So as we can see here, it's at the top of a Bollinger Band, which actually means that Envova probably in the short term, probably pull down just a little bit. But again, this is just one metric, right? You also really want to base like long-term investments or even middle-term investments based on the moving averages and see how they've been doing over that. I mean, as we can see here, Nova being over all four major moving averages, I do believe with high volume that they can get back to, his all-time high of roughly, $40 a share back here. And they just need good volume, as I was saying before, to come up. And just going down here, you guys know what this is, I'm pretty sure, because we've covered that in the past few videos. And if you guys don't, this is basically just the RSI, Relative Strength Index. We really don't want to see this above 80, at least not as of right now. But, 68 is not too bad of a number. One thing that does worry me, again, stochastics, 86, a little bit high right now. And, MACD, basically as soon as this turns positive, it also means that the stock can be in for a little bit run. And as it just did a few weeks ago, running that 15%, as I said. But again, if you're not trading this for the long term, make sure this maybe comes back down to like that 30-ish level, and I think this is an extremely good buy. And just going over a few fundamentals here, this is their return on equity, during over COVID and when right after COVID hit, that March, you know, equity is really low. And we're talking about 1.4%, but historically they've been averaging around the 20%. But they've actually done extremely well, during the after effects of COVID and in this past year, we're talking about growth up to 62, 60, 53% of return on equity, and I believe in the past like 4 quarters or past year or so, the average return on equity is over 40%. Extremely good there. The next one we usually go on to is debt to equity here with Envova. A lot of their debt to equity is coming down to 0.94. Anything below 1, as we said before, was ideal in our educational videos. If you guys haven't watched those, make sure to go watch them as well. And then one of the last things that I have here is their free cash flow. So in my opinion, these small cap to middle cap stocks will be the ones, as of right now, that you'll find that are truly undervalued. The reason for that is a lot of the large cap stocks are overvalued, at least in my opinion. And having this really high, like basically price to free cash flow is really important for these middle cap companies to keep on growing or small cap companies to keep on growing. So as we can see here, being at just 3, it's extremely good. Having free cash flow at roughly, what is this here, 1190. Overall S&P right now I believe is trading at about 14. So this being low is actually really nice here. Just another fundamental to base what it's off. But we always want to check on the earnings, right? They got the next earnings in the next few upcoming weeks on October 26th. And I do believe that this could be another relatively big catalyst for them going into this last quarter of the year. I mean, if you guys just see here past year, just absolutely destroying earnings. Yeah, for sure, it's definitely slowing down in the amount of surprise that they're having. But, posting these numbers, I don't think that Envova will slow down in terms of like their overall consensus EPS and how much they actually report. So I do think the surprise will be upwards of 50% in this next quarter here on October 26th. So maybe if they pull back before that 26th, you could get a good buy-in on them and hopefully wait for them to run up. And just going over a few more fundamentals here and just financials. As you can see here, total revenue, it really hasn't grown that much since 2017. Maybe growing about, what is this, about 8% here. 10% here. But the one thing I really do want to point out is that even though the total revenue hasn't grown as much, their actual cost of revenue has gone down dramatically. So about 400 to almost 70,000, and then the gross profit more than 100% growth in like just about 4 years, right? And another thing here, their operating income versus operating expense, income almost quadrupling, in 4 years, you know, doesn't really look like they're slowing down anytime soon, and I really do think that's extremely good long-term stock. And then just a few last things. Price to book currently sitting at 1.08. We said anything under one could mean that undervalued, but really anything between one and three, just means that's pretty fair, pretty good value overall. And price to sales being at 1.14. Do think it's relatively good for, a financial company like Envova. Trading at like these lower numbers here, it's really good. I mean, we're talking about also 4 P to E at 5.6 and just trailing P to E at 2.27. Again, just overall extremely good fundamentals in my opinion. Only things I would really worry about is them coming off a little bit of a high. Yes, this could also mean that they could potentially run up to like this 40 level here. But at the same time, just watch for it. The market is starting to go a little bit sideways, and stochastics usually tell us a little bit more about it going sideways than the relative strength index. So again, starts to pull down, wait for it to come back to like this 20-30 level with the stochastics. Again, I'm using a 14-day stochastic, but yeah, just wait for it on it, and yeah, if you guys have any other questions and any comments, leave them down below. Hope you guys have a great rest of your day. Peace.